Usually when we do forecasts for like, how long will it take for this machine to pay itself back, or like how much money can we make this year or whatever, then I think it's usually a good idea as a miner to calculate everything in fiat, like let's say US
Right.
dollars, right? So it's usually a good idea because that way you got a relation that you can also your expenditure, what you're spending for the machines. This is also in dollars, right? So you want to be calculating the mining revenue that the miner brings you back. You want to calculate that in dollars also. And then this way you can show like, the miner will slowly pay itself back at some point, and at some point you're at break even. So that's nice for these kind of future estimations and so on. However, like we're believers of Bitcoin, and if we wouldn't be believers of Bitcoin, we wouldn't be mining Bitcoin. It's the risk that's difficult to assess otherwise. So we actually try to keep as many Bitcoin as possible. We mine it in order to accumulate coins. So we see mining as an alternative to buying coins, and our investors they buy into mining as a risk mitigation against just putting all your money into Bitcoin like today.
Yeah.
It's better to make an investment and then have it slowly accumulate coins over a couple of years. So that's the way that we're doing it. Of course, you need to have like some risk management, right? Like in case the Bitcoin price crashes, like it did yesterday, for example, a bit, you don't want to be in a position where you're forced to sell coins at a low price.
Exactly.
So you'll be accumulating coins, and then whenever the price is like good or there's like a price spike, whatever, you want to be selling a little bit, like as a trading tactic, in order to minimize the amount of coins that you spend. Sure, but still the underlying value proposition is your expenses and your costs are always in dollars, so you gotta have a way to reconcile that.